Okay, hi there, guys. Just let me know if you can hear me or hear me loud and clear. Pretty sure I'm coming through. Just want to confirm that. So give me a thumbs up. How are you, Gino? G'day, Ali. G'day, Murray. How are you, mate? All right, let's get into it. Welcome to Trade Setup. It's the live stream for the 2nd of August. Just 1 second there, guys. Just be a tick. All right, sorry there, guys. So you can hear me good. No worries. Well, let's get into it. Welcome to Trade Setup, 2nd of August. Like I said, for anyone that's new, what you'll see on the screen, it's our presentation page. So on the top left-hand corner, you'll see us at Twitter. That's our Twitter handle, at trade_setup. Facebook, the top right-hand corner, and the bottom right-hand corner, if you subscribe to us at YouTube, that's at Trade Setup, capital AU. You'll find us, just do a bit of a search on Trade Setup. You'll find us on there. You can subscribe. There's a whole lot of material on there to listen to too. And if you do have any questions of past material, anything we put together, send me an email to support@tradesetup.com.au. All right, so today we'll just do the usual, go over a bit of a markets, what happened overnight. I'm sure you all know by now, but just a bit of a recap of the main themes. Um, yes, where the ASX is at, and what I thought I'd go through is something different, just to change the pace a bit. Um, go through something I was looking at last night. It's a bit of a technical analysis. Just a bit of a, how would you say? I was putting together something last night, playing around with some MACDs and putting together a bit of a structure, bit of a plan. Really just trying to work out how to understand the MACD and use it to, well, use it in context of what I look at. So I thought it might be worthwhile just chatting about that, and then we'll get into some stocks, just the usual. So remember, just once we get in there, put up a few stock codes that you want to take a look at, and then we'll bounce through those as well. All right, let's minimize that there. Got to transition that. All right, so I'll get the ASX up. It's not what I wanted to do. Okay, so we're down 16 at the moment. Last night we had more of a bit of a kick-off with the trade war, the disputes between China and the US. Now, I think they were looking at the US were looking at tariffs of 10% or so on 200 billion. Now the US on imports into the US, now they're looking at potentially bumping that up to 25%. I think it's more of a bit of rattle the cage type of thing from the US, from Trump, from his administration when they're going into negotiations. Bit of a heavy-handed tactic, I guess. I don't know how to go. I mean, I don't think the tariffs are very good for anything. So, um, but yeah, that obviously caused a bit more cause for concern. The US was backed off a bit. It's nothing too severe, to be honest. It wasn't too big. The Dow was down a bit. Then the broader market S&P was down a bit less, and you had the Nasdaq, which actually finished in positive. I think you had earnings from Apple after the bell. The previous session were quite strong, and I think that dragged the overall Nasdaq a touch higher. Um, commodities a bit lower overnight. You got crude was down, gold was down. It's a US dollar theme again. The US dollar was higher, getting bought up. It's more of probably a safe haven. So if they really can't come to some sort of agreement, or it kicks off a bit more between China and the US, that the argy-bargy on tariffs, then you would expect probably a bit more buying into the US dollar and commodities to get hit a bit more, just to continue that trend on what's happening in the past. All right, so we'll quickly touch on that CSP chart. You can see that it's still hovering around up there above that 28 mark. I mean, it's still longer term, it's looking positive. It's pushed up through 28. Let me make that a bit thicker. Pushed up through that 28 mark, and it could be just holding on the higher low here. Bit of a easing of pressure from that 28, 40 or 50 zone. Pull back a couple of days, run a daily. Yep, run a daily. Get rid of all these. Bit of an easing the pressure there. It could be holding this high low, start working its way back up to the all-time highs. That would be quite interesting. You got to remember the US economy is still ticking along nicely. The Fed overnight, they held rates on hold. They held them on hold, which makes a lot of sense. They're still looking at potentially 2 rate rises by the end of the year. I think they really are keeping an eye on what's happening between China and the US with regard, well, the administration and Trump and China with regards to tariffs, because that could ease um, economic, well, ease inflation off as companies just come under a bit more strain, I guess, because of the tariffs. So they will keep that in mind. But if all works out well, they are working to 2 more rate rises there. Inflation's around the 2%, which is the top end of their target. So if it stays there, they're happy to leave it for a little bit. But if you see upwards pressure on inflation or the jobs numbers coming out of the US, then you would expect them to really pretty much guarantee to lift 2 more rate rises by the end of the year. Even 2 more, I think they're pegging in for next year. So the economy is going along nicely. It's just all the talk that's really flattening things out a bit and flattening any gains. I'd say that if we didn't have the dispute over tariffs, that wasn't even an issue. They weren't even talking about it. We should see the US probably into new highs. You would have seen the US into new highs by now, being dragged along by a really healthy economy. And the reporting season, it keeps getting bumped up. It's doing a lot better than what they expected. The current reporting season in the US, so I'm not sure how far they into it. Over halfway, probably 2/3 of the way through by now, and it keeps getting revised up. So it's going quite nicely. That's the S&P. Look at the Dow. Dow probably looks a little less stable, or a bit more shaky. It's only just pushed up through these previous highs through around that 25,400 mark. Popped up through there, didn't get too far, and it looked like it may just pull back and build a higher low, but resume that trend up. We'll have to again see how we go. There's another high just back here from when we first had the sell-off at the start of the year, high of 25.8. It's another 400 points up, give or take, which could cause a bit of reaction up there. So we might just edge away up there, react off that zone. Otherwise, this base, I quite like it. I mean, you've got a good, solid, strong support zone through at the lows around 23,350. Touch down here, build a higher low just in here, only a touch higher, then another higher low. So it is working quite nicely. You would expect this just to grind higher. If nothing else changes, I guess it's just got to do with what's happening over between China and the US, what kind of a drag on the economy that's going to be. FTSE, big sell-off, obviously. That was last night. Wasn't too good, but it's still, you can just see that grinding up. The general trend is up at the moment. What I'd prefer to see, and I would have expected it up near these highs around that 78 mark. You can see there's some sort of resistance zone through here that's been sold off down from that zone up there. What I'd prefer to see is a bit of contraction in here, more intraday probably more than anything else, but some higher lows, some minor higher lows holding, and then see if they can curve its way up and really start to accelerate. At the moment, it's more of a grind up. It's been capped on the upside with some minor higher highs, ever so slight higher highs. You can see every time it takes that previous high, it's only a little bit again, pushed up into that resistance. We reacted off there, straight back down to the bottom end of that channel and heading higher. So, but either way, that trend is up. The weekly is not so clear. That weekly trend, give or take, it is up. I mean, this a major correction off there at the start of the year, and then it bounced straight back up to take out the highs into all-time highs. It is holding up at the top end of that range, up at the top end near the highs, the all-time highs anyway. So we'll see if that can buoy itself up here and kick on. DAX, yeah, DAX is more in line with the weekly trend. We've got these lower highs pressing down, but also higher lows holding. It's more of a squeeze in that market as the euro decides what it's going to do. What they are, I mean, they're still looking towards potential rate rises, but the ECB haven't earmarked anything just yet. Their rhetoric, or whatever you say, their wording of their statements hasn't really changed. So yeah, they're still looking potentially at rate rises down the track. So their economy is kicking along nicely as well. Well, the European zone is kicking along okay as well. Now, to us, the charts on the ASX on the weekly, do I? I mean, just looking at that weekly, you can see it's been trending up since pretty much the start of 2016. We had a big backing off from 6,000, that big sell-off down to the lows, which were 47, and we've been just holding higher lows ever since there. Really been grinding up. Held a high low recently around that 57 mark. We'll just draw that up actually. There we go. So you can see that trend. It's still holding quite nicely. It's going to get ahead of itself occasionally, get a bit overbought on the weekly, and then you'd expect a bit of a reversion to the mean style. So I think really at the moment we're starting to get a bit extended on both the weekly. You can see stochastics buying run out of pressure, and selling pressure starting to ease into the market. You see the banks are starting to come off today a bit. They're not looking too healthy. So that may drag our index. You can see the last couple of weeks actually been bought up into the end of the week. So that's quite healthy. It could just get a bit extended. Um, Potentially that's what we're looking at here. If it's just going to keep pushing up and dragging some more and more buyers in, these minor pullbacks on your daily chart, but that weekly trend is still, you can see that's still intact. So everything longer term trends intact. This most recent really comes down to the daily is still intact, still edging away. Um, Even though you've got the headwinds of what's happening over the US, and it is a bit of a struggle sometimes to find some decent trades. You've got to remember that the daily trend is still intact. I mean, we are extended up here, but it doesn't mean anything. The market could stay extended. You can see it was extended up here. It was probably, and it still continued high. We made highs, and then we still held higher lows and pressed on for another, that was a good few months, pressed on up. And this kind of price action the same sort of price action, you can see it bounce straight up, and then we kept edging up. And that's going to clean out a few people, obviously. It's going to be a bit choppier, but it could still edge up and grind up to 64 before maybe we have a bit of a decent enough correction and build a nice little base to work up from again. But longer term, that weekly trend's up. Let's take a look at the daily. You can see the daily, we're starting to find a bit of resistance or a bit of selling pressure at 63, but we are holding higher lows. There is still some buying on pullbacks into the index. That's what I want there, I don't know. So any sort of a pullback, that's that most recent move up that we just said. This obviously got a bit ahead of itself up into resistance zone up here before we backed off, found some buying at high low, beautiful little, you can see that inside higher low here, and then it kicked off from there. Got this move up, bit of a pullback, held a higher level, got a bit ahead of itself up there, a bit extended into that 63. That was the first time it touched on there. You can see this pullback here, and you can see that's that double leg we're talking about, but still it was above the anchor, the most recent anchor to that level up, or that leg up, which was around 61.75. That pullback to about 62. Then we started lifting again. It is choppy, obviously, and it's a bit of a tough one to trade when you get this choppiness into the market, but we're still holding higher lows. So this, even though we're down today, getting a bit choppy today, we could easily turn around and bang straight up through 63 and just catch a lot of bears off guard and really drag in some more buying into the market, press on again, extend up, and then have that same sort of price action start getting a bit choppier, find some sort of selling zone where we're running out of buyers and sellers are starting to jump in to take a bit of profits off the table. Again, it's that theory because of what's happening overseas and what we're facing with commodity prices and things, the headwinds we're up against, the risk, people are not willing to leave risk on the table. We've said this before. They're not willing to leave risk on the table and stay in positions too long. If it starts to, if you're in a trade which starts to run out of steam, booking profits. So I think that's a theme at the moment. All right, but that's where we're at the moment. We've got a few positions running now, which are going quite nicely. Just let me remember what we got. BKL, that's backed off from the highs. It's starting to potentially picking up today, even though the market's down. This, you can see that price action is really nice. This was a good strong leg up. We caught a lot of this. Then we got stopped out on the way back, took a profit, stopped out a remaining, and it's been chopping around since then. It's starting to lift again. You can see just probably what we got a few days ago. It picked up, run into that previous high at around 155, backed off from there. But if we can hold again, just hold a higher low in here, I think that's going to take out 155 and head higher. And pretty much what we're looking for is that from low to high, extending from this low potentially up, and that will take us up to these highs somewhere around 175. So it could have a lot of juice in it still. Um, I just want to see how that goes. At the moment, it hasn't quite played out. I mean, we could have a double top here. We still got buyers pressuring the market higher, and you can see sellers came in, but even though they came in with a lot of pressure from oversold zone, it's come around to that 50% mark. Buyers could be starting to step in. They're soaking it up, step back in, and see if they can ream this price up through 155. But PME was another one we got, which has backed off from the highs as well. We're up on that one. I just want to see if we can hold in here around at 840 and kick up through um, the highs at 888. And I think that I would expect that to take it through 9 with these nice, high lows. You can see the price action on the weekly. The price action is beautiful. It's pushed up, had that corrective phase, popped up, another corrective phase there, but that's just inside the recent price action, built a high low, then it extended up, got to 9, and we've had this corrective phase and we're coming out the other end of it. So you can see that that market's starting to lift again. We've got that $9 zone to contend with again, and that's potentially going to be a bit of a headwind, but the fact that it's gone through such a good corrective phase since 2008, and you can see that buyers are stepping in the way down, and then it's starting to come out the other end, that you would assume is going to project up and through $9. But we'll just keep an eye on the price action, really. Let it tell us what it's going to do. Now, MYX was the other one. That pushed up into $1. We're looking for a partial at around $1.05, and it's happened to us a few times when it's fallen short of our partial zone, or it's just gone bang straight up and through. So I'd like to see this one extend up. I like the daily charts. You can see it's had a big push up. It got up to $2 and then pretty much capitulated from there. And it took out a lot of these buyers on the previous move. It's come from way down at 30 cents or 20 cents. So that big leg up, multi-year move up. And a lot of that heat came out pretty much in a year from the move from the highs to the lows. And we're starting to lift. You can see the market starting to build up again. It's built that base. It chopped around through here, around that 60 to 70 or 80 zone. Chopped around through there for a few months, and we're starting to lift. It's only been recently when we've got, well, that's the choppiness through there, through 80. Then we started to lift off a higher low, lift up through 80. So that's your first sort of heads up where, okay, we're heading higher. The market pushed up from 70 up through about to 92, pulled back, and then consolidated through here. That's holding the highs, which is really nice price action. So we're looking for that leg, really looking for it to extend higher. I'm looking for, say, potentially 70 up to 92. What's that, 22 cents? If you take it from this low at around 80, just say 80, where does that take us? Above $1. So it should take us somewhere around $1.05 or thereabouts. That's why I'm just looking for that initial thrust up into that zone, just to get a bit more extended before we have some sort of corrective action. And it's not too bad. I mean, the last few days, you got a good green candle, a couple of red candles, a green candle, a red candle, but it looks like it's rejection intraday. The weekly's still looking strong. It looks like it'll pop up through. It's just that whole number at $1. It's probably a bit of concern up there. But look, we'll see how that goes. That's probably it. Anyway, we'll get on to what else I was going to chat about. Does anyone any questions just before we kick on? Just on what I was banging on about there, while I have a sip of coffee. If Lauren's in, sorry, mate. Maggie, how are you, mate? Good to see you back in. I see you've been liking the Twitter feeds. Thanks very much for that. Much appreciated, actually. Now, I'll go through. That's not what I wanted, was it? I just want to go through pretty much. This is the SPY. So what I was doing last night. Look, I thought it might be interesting for, especially from a technical analyst point of view, or from a technical point of view, just looking at a few charts and. But I don't think anyone can make Trump shut up. Oh, it's amazing. He's a real businessman. I think, well, he's not dealing with business anymore, is he? He's dealing with countries and politics, which is a different ballgame, I would expect. He's probably done some good things, I guess. I just think he's a bit of a, for lack of a better term, a bit of a tool. But whether he's doing the right thing or not is yet to be seen, I guess. It's just the way he uses Twitter. He's like a 15-year-old. He loves it. So what I was looking at last night, what I was playing around with, when everyone had gone to bed, when I had some time to myself late at night, as you do, just looking at a few charts and playing around. I've started to get back into the MACD. For anyone that doesn't know, that's your moving average convergence divergence. It's an oscillator. Um, I'll show it on another chart in a second. It's an oscillator, so it's just showing the strength of the move up or the move down, which way the momentum is. So I was playing around with that, and as you know, I look at stochastics as well for sort of that to give me an idea of overbought levels, oversold. Now, I don't use them in the traditional way. I know there's a lot of people that you can get on Google or you can get on YouTube and you can search any type of thing on well, indicators and how they're used, and they've got crossovers. Here's the best technique ever. Use the MACD crossover, or when it crosses the zero line, you've got your moving average crossover, your exponential moving average crossover, all these sorts of things. I don't like to use them like that. What I'm looking at first and foremost is price action, and the price action is the it's the interaction between your buyers and sellers, and to me, that's the most important thing. Um, what's happening between your buyers and sellers? At what levels are these happening? Has it been there before? So when I don't mind getting up a bit of a naked chart. This is the SPY with no oscillators on them, nothing on there really, and just try to mark up and get in the habit. I always find it handy, just getting in the habit of marking up some support zones where there's been some interaction before, when there's been a change of dynamics, when the market's moved from, it's moved from moving down to bouncing, and you can see, this market's moved up. It's got to a peak up here. We've got some selling pressure coming in, really pushed it down. Okay, we've got it's not a buy zone at that stage. But what we found is the market's reacted off that point. So, okay, that's your first heads up, popped up. And this is another point where it's reacted, and we've got some selling pressure coming in. So it's gone from buyers winning out to sellers starting to stack back up again and really putting the pressure on the buyers and starting to squeeze them back out on a move down. The market's moved down, and lo and behold, it's found, I mean, it's not exact science, obviously, but it's found some buying pressure in that same sort of a zone as previously. Just taken that level out slightly, but it has bounced from there and it's bounced all the way back up again to that previous resistance zone. So it's quite clear. You can start to build a bit of a picture of what's happening and the major zones where potentially going forward. I mean, this zone again, it hasn't been broken yet. This zone again could find some buying again. We don't know what's going to happen, so I'm always liking to mark that up just to see, to keep that in mind, where we could expect some sort of reaction between buyers and sellers, some sort of interaction again between buyers and sellers. When the market's coming into a zone, obviously the sellers are winning, pushing into a zone, um, and then you get buyers, they're starting to stand their ground at a certain level. So you're always looking levels. You're always trying to find a solid level. This is a half an hour chart, by the way, but it can apply. I mean, the same sort of process I would go through a daily chart, a weekly chart, anything, just to get your bigger picture, your smaller pictures, even down to a 5-minute chart. I like my 30-minute charts. I've been a bit more active on the 30-minute charts for the SPY, just trying to get that bias for the market. What could be happening um, in terms of the ASX200 and your shares? Should we be heavy into shares at the moment because the market's heading up? And you'll get a good little picture on the 30-minute anyway. So that's why I just been from day to day to see what could be the daily bias or the longer term bias of the overall market. So I do like my 30-minute charts. So this is what I was doing last night, just marking that up, trying to get the zones where we're going to expect some sort of action or reaction between the buyers and the sellers. And you can see prior, let me just move that. Prior, from the left-hand side of the chart, the market's moved up, had a pullback. So this is your key anchor. I always like to move my key anchor for the trend up. This is your trend up. Why won't maybe I've got to move that a bit higher. Oh, okay, so you can see the left-hand side, the market's trending up, had a good pullback. This is your major anchor. That's where the buyer stepped in, built a high low, pressed the market up, come up into that resistance zone just through here. You can see we reacted off there again, but again, it held some higher lows. So this is your anchor, but this is just an inside level, and the market's pressed up again, pressed up, took out that resistance, bang straight up to around that 62.70 zone, where it did react, but we're still holding this trend up. So technically, your anchor's here. There's probably an inside level here, and then we're just looking. It started to get a bit choppy through here, but we've got a clear buy zone or a bid zone, we call it, where buyers are stepping in. It's pushed down to this zone. It's reacted straight back up and off the zone. And we've got a clear resistance zone through 62.47, and the market's pressed up. So now, where we're at now is really we're just reacting off a key. We've got a double top at the moment, but the overall trend is still up. You've still got this buy zone, high low, essentially, at 61.57, or nice little buy zone through here, holding the trend up. We are backing off at the moment. I'll take this out. I just want to mark up two sort of zones. That was your key zone. And then essentially we've got another, I mean, you can mark that right through and see that it's pretty much the same zone. It's pulled down, it's pulled back off the highs, popped up, found some resistance at previous selling zone, and then we're starting to head down again. So at the moment, whoop, get rid of that. We could be still holding this trend down. We might press down. We may press all the way back down to that buy zone, or the other sort of scenario I'm looking for. Let's get rid of something. Sorry. The other scenario I'm looking for is, oh yeah, we'll do it here. That's your first leg up, and potentially to extend to somewhere down. Well, I want to get rid of that. Somewhere down here, if I can get my box back up again. Give it a bit of a thickness there, but somewhere down towards that 61.80, and then it could potentially just pull back. That's your two legs down, start to pull back into that zone and find some buying, and you get anyone that's looking to sell it in here are getting caught on a bit of a squeeze back up. But anyway, I'm probably getting off target here. What I was going to do here, so this is my first stage, always looking at price action, always looking at levels. So I've got an understanding of what are the key levels that I'll be looking for, what are the key levels where people have reacted off, and what can I expect going forward. And then from there, I'll drop it down. I'll get my other chart up. This is the ASX200. So what I started playing around with, I've got my levels there, essentially the same sort of levels. You got the key buy zone through here. Now it's slightly different because the other one was based off the futures and this is the ASX 200, but essentially you've got the same levels, okay? You got your same high through here, different numbers obviously, but the same selling zone, which would correspond to the same resistance zone on the futures, the same buy zone. You got that inside level through here, and then that's just our most recent sell zone around 62.98. I think, what was it on the other one? It was around 62.45, thereabouts. So you can see it's same type of price action we've got. All right. So what I was just looking for and playing around with, what I'm ultimately looking for is try to get, how am I going to make use of my MACD? How am I going to find use for it? So I just started doing the usual thing, marking up levels, marking up resistance, and this is what I do on a chart pretty much all the time. I'm looking for some zones which would add up to me for a high probability setup, potentially long or short, and it has to be where it's coming off a key resistance zone. So that's the reason why I'm marking up those key resistance zones. So if we go from left to right, the market's pushed up. We've got that high right up in 63.71. So at that stage, you'd be questioning, okay, the trend's gone up for quite a while. Are we overbought or oversold? Could it continue on? Am I happy to buy if it pulls back? Look for a higher low and buy again, or what am I sort of anticipating? And that's where I was just starting to look at your MACDs, and MACDs hovering around that. You wouldn't say overbought, but the trend, the momentum was moving up, and it was hovering sort of that where you would expect the momentum to run out of steam, the buyers to run out of steam, where you would expect, and that matching off with my stochastics, the way I look at that, the buying pressure going from oversold to overbought. Is there more buying pressure to come in into this market, or what's going to happen? So up here, you can see that matched off with your stochastics have been an overbought, and you're getting some sort of divergence where you can see the MACD is starting to run out of energy. The momentum is running out of energy. So it's not looking for a crossover or anything like that. I'm not really looking for anything in specific like that. I'm just trying to look at the MACD in conjunction with potentially the stochastics, the way I normally use the stochastics, but ultimately looking at the price action. So from there, it's just going, okay, what opportunities could pop out? How could I use the MACD to present me with opportunities? Now, what I'm looking for potentially on the MACD, and this is not anything I trade with at the moment, I was just starting to play around with it again, was when you're going across the zero line. So you're going from buying pressure to selling pressure. So anywhere sort of below zero is more selling momentum, the momentum, and this is where you got your moving averages has crossed over. So you got the short term 20 and they've got the 50 exponential moving averages. They crossed over that. The trend is down. So what we're ideally looking for is a bit of a pullback. And I'm looking for the stochastic to have a bit of a pullback. You can see that's gone from overbought to oversold. And we're looking into a higher low here, sorry, a lower high. So you can see the price action, the key anchor for that move up, if I get that, at this stage, when the market was going up, that's your anchor level. Well, it probably doesn't come out as clear, does it? Let me just make that a bit clearer. Can you see that, guys? Is that, let me make it white. It's still not really white. So what I'm looking for, this is your trend up, and I always talk about anchors. Your most recent anchor to the trend up was here at around 62.76. Okay, the market's pressed up, and at this stage, it's looking overextended. I wouldn't be buying up here for sure. It would just be sitting there watching it. And what I'm always looking for, okay, if the anchor breaks, which it did, the market pretty much got poleaxed there. It sold all the way down, straight through the anchor, really didn't look back, come back and tested it, extended a bit lower, and it's pretty much gone straight through the anchor. So to me, heads up, what's happening there? The market, the momentum for this uptrend is changing. That uptrend is probably failing. And what am I looking for there? I'm always looking for a lower high. I would always be jumping in, looking for a lower high. Okay, and what you've got is that first pullback from overbought to the stochastics are going to oversold. Sorry, reverse, isn't it? From oversold to overbought, we've got the pullback, and we're coming up into that, and that's the first time we've touched up towards that 62.90 zone. Sellers have started to step in, but what you have is the MACDs are crossed over into the selling pressure, or the sell zone for the MACD. So I'm just really looking for the momentum's changed from buying to selling. We've got our lower high. We've got our stochastics in overbought. Overbought. We're expecting selling pressure to come in. Buyers are running out of steam. They can't get back up to the previous high at 63.17. They're falling short quite a bit, really. And you're looking for that secondary leg down. And lo and behold, the market got poleaxed to come all the way back down to this 62.12. And you could see it's a really, I love these sorts of moves too when you get the MACD, the way I used to use it, crossing over the zero line, pulling back to the zero line, and then extending lower. So you can see that that momentum is really kicking on a bit more and really starting to kick on, on the sell side. All right, the market's pressed down, and then we got down to an area where you'd probably be looking for, okay, that move down is running out of steam. Okay, so if you're looking to sell down here, you'd probably be, it's a bit crazy, but I wouldn't be looking to sell down here. I've got my indicators where I look for selling and buying pressure, both in the oversold zone. So to look for a selling opportunity down here might be a bit tough. All right, so there, if you did happen to get a sell on, great, that would have been fantastic. The market's run out of steam. It's found some buyers down here, buyers starting to jump in. You can see a bit of divergence, and we're going, so just one step back. What I'm looking for, I'm really just looking for shoulders in this type of technique, and I'm looking for a buying opportunity on a pullback using the stochastics in oversold, but the MACD on the upper boundary or above the zero line, and the reverse for selling. So in this instance, the MACD was below the zero line, looking for a pullback. Sorry, the pullback was up here on the stochastics. So I'm getting to overbought. So I've got that pullback I'm looking for, and I'm really looking for that opportunity for a seller opportunity, a break lower, and then just try to manage the trade from there, or manage what's happening from there. And that's after that initial move down, prime area just in here. You got your shoulder, everything's in place. You got the break of this uptrend. You got the initial thrust down, a pop back up where you got these buyers thinking, okay, the market's going to continue on to new highs. They're getting met with some heavier selling pressure, as anyone in here that didn't get out initially is potentially just want to take a break-even trade or at a small gain or a small loss, trying to minimize the damage. And then you got that second wave of selling where the Johnny come lately to the trend, where potentially anyone up here or anyone that have bought it down here is watching this price action and just starting to watch their profits evaporate. And that's why you get that second acceleration to the downside. All right, so next step, we're just looking for a buying opportunity, potentially a buying opportunity. I mean, this is not very clean. This one, you've got this major, a pop up, a big press up. There was no real opportunity here. I'm just trying to mark it up to understand how it's playing out with regards to my MACD and my stochastics. And the first real pullback, once your MACD crossed the zero line, You've got a pullback on the stochastics. Wasn't a major one, wasn't into oversold, but it was fairly close. That's your first pullback. Whether or not there was a setup there, I think it's quite extended off that support zone at 62.10. So I wouldn't have considered that a prime level as opposed to the previous sell. But what you can see, that move down is it's broken out of that move down. So we don't know what's going to happen, but I think pretty much that contraction is over. And that's why I use these support lines or the resistance lines, sorry. It's popped up through. Your first pullback after breaking up was here. Yeah, if you can get in on a lower time frame chart, maybe a 5 minute, if you're an intraday trader, great. You would have had to look at your nice little setup on the 5 minute chart potentially and look in that zone. You know the zone's working for you on the 30 minute chart anyway. But I wouldn't have considered that a prime zone. So what's happened next? It's popped up, and lo and behold, we've got the markets getting extended up here on the MACD. It's extended. We're running out of momentum potentially. We come into a key resistance zone. So this is the most important thing: is the price action, is the levels, and that's a zone we don't know at this stage whether it's going to hold, but we know it's an area where we could expect some sort of reaction lower. And the fact that we've come from such a low area at 62.10 without really too much, and we're starting to get this choppy price action as opposed to this straight up movement, we could expect potentially some sort of profit taken if someone's bought it down here or on the move up as well, or bought it on this higher low. It could be an area where you're looking for a reaction, and you couple that with the market getting into overextended territory, both on the stochastic and the MACD. Has the market got enough momentum just to continue higher? The thing is, I would be looking to say no. Potentially, the way I'm looking at these stochastics and these or the oscillators anyway. So what we got from there, the market's pressed down. Again, you got a breaking of this anchor with the move down. The anchor was just in here, if you can see that. I'll just make that a bit bigger. You can see the anchor was broken. Yep, here's the anchor to that move up. That was broken, pierced down, popped back up. So you got the same sort of scenario here, or in this zone, as we got here. Except the difference is why I've marked up this lower high. Sorry, Paul, this is just the ASX200, the index. But I was just pointing out how to potentially use the MACDs and stochastics, something I was playing around with last night. Thought it might be interesting. Just let me know, guys, if it's a bit boring, and we'll move on to something else. But yeah, from here, the reason why I marked up this one is because we've got that piercing through the zero line where you're going from a buy zone to a sell zone. So potentially you're looking for sells, you're looking for a pop up. What's we got on the stochastics into overbought? That corresponds with a nice potential sell. You're in the sell zone in the MACD. The oscillator's coming down, so you can see the momentum is down. Sellers are in control. You've got this lower high, and again, it's the same scenario of what just played out here. We're looking for a shoulder, a lower high, a major lower high. This is your initial thrust lower. The buyers have tried to push it back up. They can't. They're met with some serious selling. The selling pressure's coming in from the MACD. We've got our nice little sell zone. Potentially, you could sell it, if you can sell it on a break through the previous lows with your stop just above 62.76, above these highs. And then you've got, I know this is all in hindsight, but you've got a continued move down, and it really didn't put too much pressure on you. So from here, if you did sell it on a move through there, you'd be looking to the previous support zone for maybe a partial exit, or to take some of your trade off, a partial, what we normally do on the shares anyway, or look to close out at a full position. It's really up to the way you trade. So what you can see, the market's pressed down, you've come down, you've pierced through the previous lows, but look at where the MACD is. You've got some serious divergence as well from the previous time it pushed down to that support zone. It's starting to run out of steam, and it's starting to rise. So you are getting that reaction back up again. Really what you're looking for there is some sort of higher low, which you got just in here. You've got a higher low. You can see that extension straight up into the previous resist. That's your anchor level. It reacted off. You got a higher low, then it bounced straight back up. And then what you had after that was it breaking out of this trend. That support zone's holding again. It's all, just rinsing and repeating, really, just looking for the similar types of things. Your higher lows, your shoulders, looking to see what's happening in the MACD. And lo and behold, about here, we started to cross into a buy zone. So you could have potentially bought just through those highs, maybe taken a bit of heat here, but really not stopped out if you're holding your low holding your stop below the previous high low at 62.24, just here, breaking, whoop, essentially taking an entry, a buy on stop through the highs. You've broken out of this contraction lower. The trend is starting to go from sellers in control to buyers in control. It's holding higher lows and it presses all the way back up into that resistance zone. Does that make any sense, guys? I haven't, Paul. I've never really looked at the MACD. I do. I used to use it a lot, and I was just looking at it last night, playing around with it, and just seeing how I would use it in relation to my stochastics and price action. But first and foremost, I'll look at price action always. The interaction between your buyers and sellers, with your resistance zone, your buy zones, all that sort of stuff. Then I'm always looking for your higher lows or your lower highs in that respect, and then just really trying to whittle it down to an entry. So there's probably not much to explain further from there, but it's just rinsing and repeating a similar type of thing. Potentially buy in here, your market's pressed up in the same resistance zone. You've got your MACD. It's probably running out of momentum up here. When we push up into that resistance zone, we've got a lower high pressed in here. Then you can see lower highs, lower lows starting to form. That's selling starting to take control off a key resistance zone. There's selling coming in. Really not much in here. Probably the first time technically you would have looked to sell was when it crossed the zero line. The market's all the way down here. So yeah, probably just, technically that's why I didn't mark anything up here as a sell, purely because it didn't match the same criteria I was just trying to look through before. And here's another little buy zone. You can see the MACD is crossing up above the zero. Your first pullback is just highlighted here on your stochastics and looking for a pop back up again. Continuation from really that bid zone to the offer zone. And yeah, so I just thought I'd mark that up from there on in. So does that make sense, guys? Just what I was talking about, was that useful? I thought it might be something just a change of pace. Yeah. So there are times when I don't use the MACD like that. I don't like to use it. There is a more aggressive type of entry. Say you're coming into a resistance zone, say up here, for example. This is just touching on what Paul was saying, another way potentially to use your MACD. We know that's a proven zone where it's touched 1, 2, 3. So that's where you would expect. And the fact that we washed out that zone and we're starting to pull back into or below that resistance zone, then the market tries to test it again. Then you get the lower highs starting to take place. A really aggressive entry would be just to sell potentially on that break. If anyone can see that on a breakdown, so you got a lower high confirmed, but the lower high is off a key resistance level. So I would never trade it this way so much without firstly breaking an anchor. But it's it's more of an aggressive entry, and it's trying to be early into a trade. And then you can see the stochastics are overbought. Sorry, the MACD is overbought up here. The stochastics are hovering around that overbought zone as well. So what it's really looking for is just weakness in buying pressure and looking to see. I mean, there's a lot of times it can just contract lower and then bounce straight back up again and catch you off because it hasn't broken that anchor. That's why I always like to see an anchor broken before I'm looking for a lower high. But there are times when you're working and you have to make sure you're working off a key resistance zone where you've got proven resistance before, or if you're looking for a buy, you've got proven buying support zone working in, and you want to see the price action extended into that buy zone. So it's getting extended into there. It's a proven buy zone, and then looking for your high low to work from, or the reverse for selling. So this is a proven resistance zone. It's extended into that zone. You can see that by your stochastics. It's going to probably run out of buying pressure. You got your lower high, which confirms that potentially the buyers are running out of pressure. Sellers are starting to take control. It's just a very early trade. But it could be another way to use when your MACD is starting to roll over. But like I said, I don't technically start to learn use your MACDs. But yeah, I hope that makes sense there, guys. Perfect. So chuck in some ASX shares. Chuck in a code, and we'll look at that now. Any questions on that? On what we were just discussing? If you've got any questions, you want to have a chat, just send through an email to support@tradesetup.com.au, and we'll go through it. I'll see if I can make up anything else. So I'm just going to be keeping an eye on this just to see. I mean, it's probably better suited. What I'm looking at these MACD. I'm just seeing if that consistently works out. A bit of paper trading, just to see if this type of action, if I can make sense of it, if it helps with me reading the overall bias of the market. And if it does, yeah, okay, I'll use it consistently. But it's always, I mean, like I said, first and foremost for me, it's price action, it's levels, what's happening off the price action, and using the stochastics to see if the buyers are running out of pressure, or if sellers are running out of pressure, all that sort of thing. All right. What do you want to take a look at, guys? Where'd you go? Have I just disappeared? Did I just jump on and off again? Am I coming through clear, loud and clear there, guys? All right. So what stocks do you want to look at? Chuck some stocks into the, let's see where the market's at. I'll minimize that. What do we got? Main pharma. So market's down 15 still at the moment. Let's just take a look at the intraday action on the ASX. No, don't want the 30 minute. So on the, this is just your intraday action. And again, it can go to exactly what we're talking about before. This is your 30-minute chart. Let's just see if this makes sense. We've got a, not really a buy zone, we've got a little zone through here. You've got another sort of a zone through 62.25 where the market's pressed down. You've got a resistance zone up here around at 62.95 to 63, touch above. But what we can see is, okay, the market's pressing down. You've had that initial push down to 62.60. And if you potentially extend that down, we're probably not going to get too much further, maybe 62.50 to 55. And that's just working off the market searching for another higher low, okay? Or maybe that's it there. Maybe it was 62.60 is the higher low. We don't know that just yet. Nothing's quite confirmed, but look where the stochastics are. Stochastics is in oversold territory. It is, the MACD is rolling down. I don't know if I've got that set on this 20 and 50. Yep, no, it's crossed the zero line here. So it is in the sell zone, but what we would be looking for is just to see if, you know, if that's going to be a key level, or are we going to extend a bit lower before we find some buying pressure, or are we just going to push straight into that 62.30 zone? By then, I would expect if we do push down to 62.30, it's only another 20 to 30 points lower, and we start testing down here, the stochastics is going to be well and truly oversold. And maybe you get the MACD being around 20 or so, where it's just showing the market's used up all its energy. Potentially, we're looking for that area as a buy zone, and then it pops up again, and then we really start attacking all those short sellers that come into the market. Anyway, that's the way we'll look at it. So what do we got? Firstly, CCP. Yeah, that's not looking too bad. They come out with some news. Let's get rid of that. God, it's banged high, hasn't it? It's a bit sus to me. I don't like the fact that it's gapped down here, washed out down to 1450, and on the same day banged straight back up again, and then it held a high low just here. You can see another high low here, and then banged straight out the other end. And so anyone that's been selling it through here has pretty much got squeezed out of the market, squeezed out here. The market's capitulated, and then it's finding some buying support back up again. Let's see what news. What date was that? It was around the 22nd. Anonymous report. Is that the right one? Report published. You say Credit Corp requested the Australian Securities Exchange. God, so something's come out by the looks of it. An anonymous report's always a bit suspect, isn't it? Okay, so it looked like some sort of news got defunct, I guess. Is that the right day? Yep. 20th of June. So that was the right day. So the market looks like some sort of reports come out. The market's found out it's a bit bogus. It's popped back up. That's selling pressure. So essentially, you've got a double bottom through here, if you could look at it that way. So you got your double bottom. If you can discount what's happened there, the market's come back down, retested it. What it's done is lift here. It's built a higher low, just below 1850. And your key level at that stage was, draw that a bit straighter, was around, was it 1950 or so? And on that day, the market's just gone bang straight through it. So it looks like some good news is worked that in reverse and just press the market higher. So technically, you could be looking up towards 24 bucks. The trend down has been, well, the trend has changed. The market was pressing down here. Okay, originally, if we go back to a weekly chart, you can see the market's working its way higher. Correction, a correction phase here, bit of a pullback, macro correction. The market's pressed high again, pressed up to 24. You've got the market pressing down. If you discount that, it's building at higher low, just below 18, and it's pressing back up again. So this corrective phase down through here has changed direction. The market's buyers a step back in. The market's turned. It's heading back up again. So really, I mean, I wouldn't obviously buy it here. The market's getting a bit extended where we are. I'll be looking for some sort of pullback potentially to buy into if I haven't already. If you have, this market, it still could press up into that resistance up towards 24. But either way, you'd probably just want to, if you haven't taken a partial, I'm always inclined to take a partial, always happy to, and just call it a, let the second half, I mean, take half off, let the second half run, and just look to leave your stop below a high low. The problem is it's way back here, isn't it? So if you did buy it through 19, you still got your stop in negative territory. So if you do take half off, yeah, you've got a winning trade anyway, net, if you do happen to get stopped out. If it pulls back, builds a higher low, then you can obviously raise your stop, and that's confirmed it's heading back up again. Yeah, what was the news there anyway? Dividends. Is there anything that's kicked it off? Market update on the 18th. No, that wasn't it. Somewhere in here, the 31st, wasn't it? So the 31st, this is a market update, media release. Obviously something good. The market's happy with something. All right, pressing high. So yeah, have you got that one there, Gino? Gino? No, Murray. Let's get into NAN then. Now this, I've got my eye on this, and actually I do like this one. Let's just draw it up. I mean, that price action, I do like working off some sort of contraction or some sort of macro correction. You can see this market, okay, it's pressing higher. It's holding quite nicely. You got the market got a bit ahead of itself. You've got 1, 2, the market's pulled back. And what it's doing now is really, I'd call this a higher low, essentially, through here. And then the market's pressing higher. So what you've got is this two legs down. It's obviously over a long term since 2016, taken a lot of heat out of the market, and we're starting to come out the other end where the market's lifting. And if you can draw all that up, so you can see the market's contracting with higher lows and lower highs up until about here when the market pressed up, and it's quite clear now that the market's taking a direction and it's back up again. So you can see on the weekly charts, the market's starting to press higher. So it's just whether, if we're getting overbought up here and we've got to have maybe a secondary move down. Let's draw that up on the daily. Just draw that up there. So what we're looking potentially for that secondary move down on the weekly, and that was your first move down. We popped up, we find a bit of resistance around 3, whether we have that secondary move down or whether we just get, further contraction with it. The buyers and sellers come to a point of agreement, but it's quite strong because it's at quite a high point. We're holding around these highs as compared to the most recent high low on the longer term weekly charts. Okay, does that make sense, guys? So you got your high low down here. The market's pressed down, starting to lift again, looking pretty good. It's got ahead of itself up here, but the thing is, it's looking strong because it is holding these higher levels. So you've got buyers stepping in here. Potentially, if we do get this type of price action, buyers are going to step in here. Okay, so it's actually quite a strong little sign for the price action. And then what you'd be looking for, if you've got this, oh, let's just draw that down here, got to press up here, you've got this type of price action, you'd be looking for some sort of level where you can work your risk off, and you're looking for acceleration from buy, from, I guess, compression or contraction into expansion higher, and you're looking for that opportunity to buy into a rising market. Does that make sense? So this one is, yeah, I've got my eye on this one. Keep into it, Gino. It's looking like it could be. I just want to see a bit more price action. I mean, it could pop up through 3 from here. Through $3 from here, and on she goes. It is, and you can look at the stochastics. These sellers have come in here. They pressed it down. It's popped back up to 3. They've tried pressing it down again, and it's taken quite a bit of energy to press it down, and we're getting to the sort of that oversold territory, but it is holding a higher level. So it's just showing you the buyers are starting to step in. Buyers are soaking up that selling pressure at higher levels. Okay, does that make sense there, guys? So yeah, one to keep an eye on. All right, what's next? KRC. Yeah, Kingsgate. I'm a bit of a fence sitter on this one, and there's probably 2 reasons. Oh, I mean, that trend is up. Yeah, you could argue that. There's nothing wrong with that. It's heading higher. I just don't like the way, and we've spoken about this before. Let me just minimize that. I want to make that a bit on the daily chart. All right, that's it there. So you got this, the press up, contraction, press right up to about, was it 19 cents? So that's your high. Then gave up a lot of it, pretty much, oh no, 60, 70% of that move up. Of this move up, you pretty much retraced about 60 to 70, maybe 80% of that move before we started seeing some buyers stepping in around 7.5 cents. The problem is this buying hasn't been convincing. You can see it's getting through the highs here, pull back higher low. So it's a deeper correction, popped up through the highs, not significantly before we had a deeper correction, popped up through the highs, again, not significantly before we had a deeper correction. So the pullback is deeper into the zone than the move out. So what am I trying to say? So that's your level through there when it broke up through. It didn't get too far, but the distance between the most recent higher high and this push through is a lot less than this pullback. So you can see it's quite a deep correction before we found the base, and we've just recently pressed up through the high again, and before we started to give up the gains. So to me, this buying pressure is not strong, and that's what's keeping me away from that. So I'm expecting sooner or later these buyers getting in here. There could be getting to a point where maybe any of these buyers that missed it through here for whatever reason, maybe the fundamentals have changed, something's not gelling with the buyers, they might start to step in and sell it again. We don't know. I'm not too confident with that. Let's just clear the decks. I'm not confident the way you can see that angle of ascent is not too high. So the buying pressure is gradually picking price up. But if you were going to buy it up here, say through a break there, I could just imagine you're going to have to be holding it against, it's going to be down for quite a while. I mean, if this consistently, if this same sort of scenario plays out, it breaks through the highs, you get stopped in at 13. Before you know it, you're behind the 8 ball. You're looking at a loss, and you might have to wait another month or 2 before you get back into gains. And then you might get another pullback and do the same thing. It might pull back to break even. So is that worth throwing your money at? Because what you'd be looking for, what you want to see is the market move up, a shallow retracement. Okay, you don't want to see as opposed to a deeper retracement. You want to see the market hold up here as opposed to start to lift and then get through the highs, and then again another deep retracement. You don't want to see that. That's not conducive to buying strength. What you'd rather see is the market's breaking through those highs and going on with it quite a bit, then a shallow retracement, and then breaking up again and going on with it quite a bit. That's that's conducive of a strong buying market. It's biased towards the buy side rather than the sell side. Whereas this is just, it's getting a bit choppy. So I wouldn't be throwing my money particularly at this stock. Um, you can see the price action completely different back here. We had a market pushed up, good little correction, probably about 50% of this move before it went on with it. So if you bought it on that break, back in, was it 2016? I'm just guessing. Maybe it was last year. The market didn't look back. You can see the next couple of days, it's well and truly what's happening. It's well and truly obvious what's happening there. The market pressed on, went straight up. So you had more than enough, chance to take a healthy gain on that one. Whereas this, throwing your money at something like this, buying through the break here, holding your stop below the most recent high low, is it worth it? Hope that one makes sense. CPV, see what I can get through. Whoops. Yeah, at the moment, there's not much price action to go from there. It's opened up, sold off. You found the base pretty much around 10, where it started to lift. At the moment, I think we're in a downtrend because we've just broken this most recent. Let's just draw that. Clear view. What you've done, the price action, you can see it's up, pull back, up. So that's a trending market. It's trending higher. Big sell off here for whatever reason. Popped up, built your lower high. We've pressed lower. This was your anchor level around 30. We've just pressed through that probably a couple of days ago. Pressed through that. The market's in oversold territory. So what I'd ideally be looking for here again is that it's got to put in a fair bit more price action. I want to see the market's trending down. High low obviously build. High lows build, showing your buying strength, potentially breaking out, up and out, and then looking to buy on a rising market rather than, and again, it's a high low once you're breaking out of this contraction. Once you see buyers starting to take control and starting to move it higher again. Couple that with a bit of a rise in the volume as well. All right, we've got NPL. Just look like we've gone offline there, guys. So we might be buffering a bit. Sorry about that. Let's see. All right, let's just get on with the. All right. Might be back on there, guys. I'm sorry, it just dropped out there for a bit. We'll see. All right, if it drops out, we might just call it a day. We'll see. I'll just keep an eye on it. Wasn't saying much, Paul, so don't worry, mate. Again, I was just babbling on a bit. All right, so we've got, we'll try and just get through MPL and see how we go. Go on again now. Sorry about that, mate. You'll hear me in a minute. All right, so this is MPL here. Right, we're on the daily chart. I actually don't mind this one either. We'll start with just, if we can quickly wick onto the weekly chart. Just not worth it. You're exactly right, mate. What I don't mind, again, MPLs, you can see it's holding high lows. The trend is up. You've got this double top, essentially, you call it double top, which could cause a bit of problems. The market's pressed up and it's reacted off that zone around 335. Then you can see this push down, lower high, the market's pressed down. Then you've built a higher low in here. So what you've got from there, the market's starting to lift again. So it's showing you, longer term, it's showing some good little signs. It's just whether or not we can get up in this move, we can get up and through 335, or whether we find some selling pressure, maybe a lower high in here. but that's where you'd have to go down to your daily. The longer term weekly trend is looking okay. I mean, it's definitely up. It's a bit choppier than normal. It's not as structured as a move up like that, as easy to trade as a move up like that. It's a lot longer the term. You can see that's been over a good couple of years anyway. Let's look at the most recent price action. Yeah, it's what I don't like is it's kind of deep. So we might be, if we're getting overbought here on both the weekly and the daily, you might find it has a deep correction and we start to get a nice healthy pullback from say 315 down to 290. So I'd be a bit concerned about buying it just up here. If I did buy it up here, for instance, I'd be looking to hold my stop just around 3, just below the most recent high low on the daily chart. I wouldn't want to risk too much on it. Um, yeah, but either way, it doesn't like even this price action is not too healthy. I don't see this as too clean. Clean off here. If you bought it off this low through that 295 zone, that would have been good. Then you're looking up the most first reaction zone would have been 310. Did back off, held a high low. Okay, good. Then you raise your stop up here. You're sitting in profit and see how far you can get it. See if it can push up to 330 or thereabouts. But at the moment, yeah, I wouldn't be too inclined just to buy it for me anyway. All right. Now we still have a problem, do we? All right. Anyway, well, if you can hear me, guys, we might just call it a day. It looks like it's dropping in and out too much. We're getting on a bit anyway. If I've missed anything, just we'll get organised again on Monday, and we'll do it again on Monday and just go through those. But or if you've got another something else, just whack it through on an email, and I'll get back to you. Anyway, guys, we'll call it a day. Sorry about that. And if you can't hear me, I'm just going to type now. Call it a day. All right. I'm guessing you can hear me now. But anyway, cheers, guys. Thanks very much for joining me. Before we get too many issues, we'll see you again on Monday. Have a great weekend. All the best, and we'll speak to you then. Cheers, guys. Bye.